Ray Dalio, the billionaire investor and founder of Bridgewater Associates, has issued a stark warning. He believes the global economy is teetering on the precipice of collapse, and the clock is ticking. Dalio's prediction? A potential collapse within the next 30 days. This isn't about market fluctuations or short-term volatility. This is about a systemic crisis, rooted in unsustainable debt levels primarily in the United States. Dalio's warning, delivered with his signature blend of data-driven analysis and historical perspective, has sent shockwaves through the financial world. He argues that the U.S., the world's largest economy, is drowning in debt. This debt, he warns, has reached a tipping point, threatening not only the U.S. economy but also the interconnected global financial system. The situation, according to Dalio, is akin to a ticking time bomb. He believes that unless immediate and drastic measures are taken, the world could face an economic catastrophe unlike anything seen in recent history. Dalio is not prone to hyperbole. His decades of experience and successful track record have earned him the respect of policymakers and investors worldwide. When he speaks, the world listens, and right now his message is clear: we are on the brink of disaster. The numbers paint a grim picture. As of February 2025, the U.S. national debt stands at a staggering $36.22 trillion. To put that into perspective, that's more than the entire annual economic output of the European Union. This mountain of debt, much of it owed to foreign countries like China and Japan, has been accumulating for decades. Each year, the U.S. government spends more than it takes in through taxes and other revenue sources. This is called a budget deficit. To cover this deficit, the government borrows money by issuing treasury bonds. These bonds are essentially IOUs, promising to repay the borrowed amount with interest at a later date. The problem is that the U.S. has been running budget deficits for decades, with little political will to rein in spending or increase taxes. This has led to a situation where the debt has grown exponentially, becoming an ever-increasing burden on the economy. The interest payments on this debt alone are now a significant portion of the federal budget, crowding out spending on essential services like education, infrastructure, and healthcare. This situation, Dalio warns, is unsustainable and will inevitably lead to an economic crisis. Dalio's warning is not without precedent. History is littered with examples of empires and economies brought to their knees by unsustainable debt. From the Roman Empire to the Spanish Empire, excessive borrowing and fiscal irresponsibility have often been harbingers of decline. In more recent times, the 2008 financial crisis, triggered by a collapse in the U.S. housing market and the proliferation of complex financial instruments tied to subprime mortgages, serves as a stark reminder of the interconnectedness of the global economy and the devastating consequences of financial instability. Dalio draws parallels between the current situation and the period leading up to the Great Depression, a decade-long global economic downturn that began in 1929. Then, as now, excessive debt levels, coupled with a stock market bubble and a decline in global trade, created a perfect storm that plunged the world into economic chaos. Dalio fears that we are repeating the mistakes of the past, ignoring the warning signs and sleepwalking towards another financial abyss. The consequences this time around, he warns, could be even more severe, given the interconnectedness of the global economy and the unprecedented levels of debt. A U.S. economic collapse would not be contained within its borders. The interconnectedness of the global economy means that a crisis in one part of the world can quickly spread like wildfire. The U.S. dollar, as the world's reserve currency, plays a central role in international trade and finance. A loss of confidence in the U.S. economy would likely lead to a sharp decline in the value of the dollar, creating turmoil in currency markets and disrupting global trade. Countries that hold large amounts of U.S. debt, such as China and Japan, would face significant losses on their investments. This could trigger a chain reaction of defaults and financial instability, spreading from one country to another. The global implications of a U.S. debt crisis are far-reaching and potentially catastrophic. It is a stark reminder that we live in an interconnected world where economic stability is a shared responsibility. Section 5. A way out? Dalio's recommendations for survival. Is there a way out of this impending crisis? Dalio believes there is, but it requires swift and decisive action. First and foremost, he argues that the United States must get its fiscal house in order. This means tackling the root cause of the problem, the unsustainable budget deficit. Dalio calls for a combination of spending cuts and revenue increases to reduce the deficit and eventually begin paying down the debt. However, he recognizes that austerity alone is not enough. Dalio believes that the United States must also focus on boosting economic growth. This, he argues, can be achieved through a combination of policies aimed at fostering innovation, investing in education and infrastructure, and promoting entrepreneurship. Dalio also sees a role for technology in mitigating the economic pain. He believes that advancements in artificial intelligence, robotics, and automation can help to increase productivity and create new opportunities for growth. However, he cautions that technology alone is not a silver bullet and must be accompanied by sound economic policies. Section 6, Political Gridlock, a House Divided on Debt. Dalio's call for action comes at a time of deep political division in the United States. The two main political parties, the Democrats and the Republicans, have vastly different views on how to address the issue of the national debt. Republicans generally favor a more austere approach, arguing for deep cuts to government spending, particularly in social programs like Medicare and Social Security. They also advocate for lower taxes, believing that this will stimulate economic growth. Democrats, on the other hand, are more inclined to support government spending on social programs, arguing that these programs are essential for providing a safety net for the most vulnerable members of society. They are also more likely to support tax increases, particularly on wealthy individuals and corporations, as a way to reduce the deficit. This political gridlock has made it exceedingly difficult to enact meaningful fiscal reforms. With both parties entrenched in their ideological positions, the U.S. continues to hurtle towards a fiscal cliff. Section 7. Weathering the Storm Investment Strategies for Uncertain Times. In these uncertain times, investors are understandably concerned about the safety of their investments. Dalio offers some practical advice for navigating this potential crisis. He recommends that investors diversify their portfolios, avoiding putting all their eggs in one basket. This means investing in a mix of asset classes, such as stocks, bonds, real estate, and commodities. Dalio also advises investors to consider holding assets that tend to hold their value during periods of economic turmoil, such as gold and other precious metals. These assets can act as a hedge against inflation and currency devaluation. Above all, Dalio stresses the importance of staying informed and being prepared for all eventualities. The economic landscape is constantly changing, and it is crucial for investors to stay ahead of the curve by monitoring global events, understanding economic trends, and seeking professional financial advice. Section 8. Knowledge is power. Stay informed, stay ahead. Dalio's warning serves as a wake-up call. We cannot afford to be complacent. We must demand better from our leaders, pushing them to address the issue of unsustainable debt before it's too late. Educate yourself. Understand the intricacies of the debt crisis, the potential consequences, and the proposed solutions. Engage in informed discussions with your peers, family, and elected officials. The more aware we are, the better equipped we'll be to navigate the challenges ahead. This isn't just about finance, it's about our collective future. The time for action is now. Section 9. A call to action, our collective responsibility. The potential global economic collapse that Ray Dalio warns about is not inevitable. It is a preventable crisis. But preventing it requires a collective effort. We, the citizens, have a responsibility to educate ourselves about the issues, engage in informed debate, and demand better from our leaders. Contact your elected officials. Make your voice heard. Demand fiscal responsibility, sustainable economic policies, and a commitment to securing a brighter future for generations to come. The clock is ticking, but it's not too late to avert disaster.